TheoTrade. This is Don Kaufman. It's April 22nd, 2019, and you are watching the TheoTrade evening video. 8 minutes to go to the cash close. The S&P futures are massively unchanged, of course, following the Easter holiday. Most of the European markets, even some of the Asian markets, are effectively closed. And I got to tell you, it has really kind of dampened volume and spirits here in the U.S. markets. The total volume right now inside of the S&P futures, with just 8 minutes to go to the close, is 600,000 contracts. You know, people ask, well, what's typical? Well, what is typical? I don't know. Let's take a quick glance here at the daily and get a quick feel for this. Well, lately, the typical has been about 1.3 million contracts, people. We're not even doing half of that. It really does feel effectively like a holiday trading session. And quite ironically, look where the S&Ps are. 29.11. And I was talking about ad nauseum all through the course of last week, even the week prior, about this specific gravity point inside of the S&Ps, that it was going to hold a tremendous amount of weight. Little did we know that we'd be sitting on 29.11. Again, I just switched to a 30-day, 1 hour. We're sitting on 29.11 now for, way too many trading days. Volatility is coming off. Bonds are down a little bit. But once again, you know, when it comes to markets in this almost like holiday trade, take a look at the low volume in terms of the bond markets. The bond markets also not even doing half their normal contract size. With that, I figured this is the perfect evening session to do an in-depth discussion about none other than earnings. I mean, just the next couple of days, we have a little bit of an earnings extravaganza coming out from the likes of, I'm just going to select a few over here. You could look at Snapchat. You could look at Boeing, Caterpillar, Microsoft, Tesla, Facebook. I mean, they're all coming out effectively between now, this Monday, and Wednesday afternoon. Let's get started with a few of these. You know, people are probably surprised because I brought up Snapchat. Snapchat. Well, you know, who doesn't like disaster du jour in terms of earnings? One of the reasons I'm actually bringing up Snapchat, though, specifically, not only does it get rocking around earnings, but its implied volatility is through the roof. I mean, here's an expiration. I'm just going to close up this left side bar so you guys can see this, but here's an expiration with 4 days remaining, 173% implied volatility with a $1.85 move. What that really kind of breaks down to, all right, so you have about a $1.85 move being priced in on like an $11.50 stock. It's just a hair over about a 10% move is being priced into Snapchat. Like, what could we do around earnings over here? You know, if you want to try to take advantage of that, like bump up in implied volatility, first of all, okay, implied volatility is the market's way, okay, of really dictating supply and demand. So I know a lot of people look at this and they think to themselves, ooh, that's juicy. It's 173% implied volatility. Needless to say, that implied volatility is going to go up, you know, even a little bit higher. It's just, again, the implied volatility prior to the earnings is going to continue to rise up. But again, we have all day effectively tomorrow, because again, if you take a look at the earnings, and I'll just zoom in here for a second, we take a look at the earnings, you're going to have the Snap earnings out April 23rd after the market, all right? And when those earnings come out, again, throughout the course of tomorrow, the implied volatility is bidding up, but the implied volatility is bidding higher to offset, okay, any forward decay, meaning that options typically, okay, decay as time moves forward. Well, yeah, but these have earnings in them. So what happens is this implied volatility goes up. Why does the implied volatility go up? To offset the decay. So effectively, the expected move is really not going to change much prior to the earnings, but you will see this implied volatility climb. And it's so like alluring to newer traders, like, oh, I'm going to sell me some high implied volatility. It's just selling yourself into kind of a riskier position. So here, I built a position in here for you. Okay, what is this position? And I'll kind of delineate exactly the position. By the way, I'm going to let you know right now, this one is not for the faint of heart. What I've actually done is I've gone out and I've sold an 11.5 call, 11.5 put. So I'm selling, okay, like the at-the-money straddle, selling the straddle. Now, if you sell a straddle and sell it naked, effectively, if this stock goes all the way down to zero, you're a loser. But if the stock rallies huge, that's the risk to me in Snap, if the stock rallies huge. So what I've done is I've actually sold an 11.5 call. I sold okay, an 11.5 put, and then I turned around and bought a 14 call. Why did I do that? Just to hedge some of my upside risk. And well, this is what the risk graph really kind of breaks down to. The trade is put on for about $1.61 credit, $1.61 credit. Now, that $1.61 credit is, again, it's inside the expected move, but it's only inside the expected move by about 20 cents. So what am I asking this stock to do? Well, I'm not asking for all that much. I'm saying, hey, okay, here's the expected move, and that expected move is supposed to take us what? $1.84 higher, okay, or $1.84 lower. All I need is slightly inside, okay, of that $1.84 range. How much inside? Well, I have $1.61 of play on either side. As long as we're in the $1.61 range, higher or lower, I will have a degree of profitability on this particular trade. Now, what's the risk in the spread? Well, the risk in the spread is if the stock absolutely tanks. Okay, is it plausible? Is it possible? Yes. But in this particular stance with a stock that, again, has been beaten down and rallied back up and beaten down again and rallied back up. I mean, this is just time and again over here. I actually view a lot of the risk to the upside over here, hence why I am actually creating a degree of a hedge. So that's just a quick position that I'm taking inside of Snap. This is something I will actually kind of measure out and execute in tomorrow's trading session. With that, the next one I want to talk about here briefly is none other than Microsoft. All right. Microsoft. Why do I want to look at Microsoft? It's a runaway freight train to the upside. All right. Year-to-date percentage, it's already up 22% year-to-date. Again, 22% year-to-date. You know, how does that compare, though, to some of the peers in here? Well, it depends on what you actually consider a peer, okay, of Microsoft. I have to pull up Intel because Intel is up a staggering almost 25%. I've also been talking a lot lately about stuff like Cisco. Okay, Cisco is all of a sudden like the hottest stock. Hasn't been all that hot since, I don't know, about 1999, maybe 2000, March of 2000. And here it is 31% a year-to-date basis. But I wanted to measure Microsoft against some of the peers to show you, again, this has been quite formidable in terms of the market cap to the upside. Here is one of the leaders of the pack that's actually driving the entire Nasdaq higher. So I bring up Microsoft because, again, it's up 22% a year-to-date basis. Now, what are they going to say? All right, what are they going to say on Wednesday? First of all, I'd have a difficult time believing that anything that Microsoft is going to say would be effectively negative. Why? Okay, why do I say that? Well, you know, there's a lot you can look at in terms of Microsoft. One of the things I like to look at, I bring this up from time to time. It's like a company profile. Everything right now is about the cloud. And if you've missed some of the discussion lately, like IBM's earnings, you know, in the previous week, they weren't all that great, but they did talk about like 10% growth in the cloud. Well, Microsoft is becoming the king of the intelligent cloud, as they're putting it in here, and I would believe that that is going to be stellar. Nevertheless, okay, we've seen such an explosion up. I believe that there's the closing bell. I believe a lot of that upside potential has already been priced into Microsoft, and unless they have absolutely stellar, mind-blowing numbers, that Microsoft in the days after earnings and possibly right after earnings will actually come down to a degree. Now, the expected move inside of Microsoft is rather mild. Okay, we're looking at an expected move of about $4, okay, and 25 cents. In this particular case, I'm actually going to take the bearish shot, and the way I'm going to do it is I'm not doing it here on Monday, not even on Tuesday, but on Wednesday. I'm going to let the stock kind of play out, and Wednesday I'm going to come in here and I'm going to construct, okay, like a $2 wide in out spread. That's something like a 125, for instance, 123, a $2 wide in out spread for right around $1. I'm going to take an outright bearish position. And again, I'm telling you, okay, that I would expect their cloud business to be absolutely smoking. Nevertheless, okay, the trader in me sees that this has already kind of vaulted to the upside. And without, again, blowout numbers, that is going to be a tough act to follow. Now, yes, we have, Boeing coming out, and I'm carrying positions in Boeing, and I'm already carrying positions in Caterpillar. We have Facebook coming out, but, who doesn't love to bash, Zuckerberg a little bit? But we'll leave that aside, for some of the live chat room, okay? The last one I'll do a quick mention on here happens to be none other than Tesla. Okay. Now, Tesla, this one is going to be quite exciting. First of all, Tesla is looking at about 100% implied volatility, which equates to almost a $24 expected move. Well, right, it's a $260 stock with about a $24 expected move. You know, the implied volatility can vary a little bit. It's going to see between like 8, 9, maybe even a 10% move is implied coming into the earnings. Now, me, frankly, okay, I have difficult time kind of betting against, Elon Musk, but there's a few things that you should be aware of. First of all, on a year-to-date percentage, again, this is a stock that's down 15% year-to-date. You should also, be forewarned that, Tesla warned earlier in the quarter that they may very well have a miss and take a loss in this particular quarter. They also had news, recently that they cut the size of their board. There have been a lot of changes and corporate changes, in the near term inside of Tesla. We've also heard Elon Musk lashing out a number of times just in the last couple of days at Panasonic for the lack of growth of the Gigafactory. All of this adds up. It doesn't appear to bode well for Tesla's earnings. In this particular case, again, I would be very, very cautious, to step out and to take any extraordinary risk. I am not going to try to sell the premium in this particular case, but I am, in the live chat room, going to be constructing a type of a bearish trade. And I think you guys will find this one quite interesting. In just days to come, I will reiterate Tesla's earnings coming out right here on the 24th after the markets Wednesday. This is one where I see, some opportunity. With that, I want to thank you guys for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.